Namaskar. Hello everyone. Myself Deepak Gupta, and in today's session we will undertake the estimation of working capital based on operating cycle. So what we will be doing that we will estimate the working capital on the basis of the operating cycle, and we have already discussed what is operating cycle in our last session. So you will see that for operating cycle we need the raw material conversion period, and we will solve this with the help of a question. If you see here that the raw material average in stock is about 4 weeks. So this line average raw material in stock denotes the raw material conversion period, which is given 4 weeks. So because the cycles have been given in weeks, so we will presume that 1 year will be equal to 52 weeks. As in our last session on operating cycle, we have understood that if the period is given in year, then we should take it one. If it is in months, then we can take it as 12. If it is in weeks, then we should take it as 52 weeks. Or if it is in days, then we should take it as 365 or 360 days as rounded off. So because here it is in weeks, so we will assume all cycles in the form of weeks. Similarly, we need work in progress conversion period, which is given here that it is 2 weeks here. So we will see that this is 2 weeks. And for the finished goods, because we need also the finished goods conversion period, and that is in the warehouse for 4 weeks. Then we need the debt collection period or the receivables collection period. So it is here that the credit allowed to debtors is 8 weeks, so it is 8 weeks. So basically this denotes the total operating cycle. Then we will deduct the creditors payment period, which in this case is credit allowed by the suppliers is 4 weeks. It means the CPP is 4 weeks. Similarly, the time lag in payment, this is wage conversion period, your wage payment period is 1.5 weeks. And there is no data for the overheads, so there is no lag in the form of overheads, so this will come out to be the net operating cycle. So in this case you will see that total operating cycle was 18 weeks, and if we deduct this 5.5 from here, so it will come out to be 12.5 weeks. So this business is working with a net operating cycle of 12.5 weeks, which is approximately justifies the 4 cycles complete in a year. And this is the cost classification, that is raw material cost, labor cost, and overhead cost is 80, but because it denotes rupees 10 as depreciation, so this cost of 80 of overheads will be valid for selling price fixation, but for working capital estimation we only need the cash cost, so it is only rupees 70 for us, and therefore the total cost should not be 220 but rupees 210 for working capital estimation purposes. Now this figure of selling price may be important for debtors if we take them at profits, but on a conservative basis we can take them at cost. So if we take them at cost, then this selling price will not be important, and we can value the debtors at 210. So if we value debtors at cost, then the finished goods and the debtors will be valued at par, that is a total cost of 210. And if we value debtors at the selling price on a more conservative basis regarding working capital estimation, then finished goods will be valued at the total cost of 210, and the debtors will be valued at a price of 240. So with that in mind, we will try to solve that. Here we will make primarily two columns, particulars and amount, and based on operating cycle we will make the working capital estimation for the business based on all the formulas which we have discussed in our earlier session, and I will show how we are gonna do that. So if you see here, that normally when we talk of the word working capital, then the first items have to be current assets. So we will have to calculate the stock of raw material. We will have to calculate the stock of work in progress. We will have to calculate the stock of finished good. Then we will have to calculate the figure of the debtors or the receivables and cash and bank balance if there are any given in the question. So all these figures will constitute the gross working capital, as we have seen in the earlier session, that current assets are equal to the gross working capital of the business. Now, from this gross working capital, we will deduct the current liabilities, and these current liabilities has to be the creditors, that is the payables and expenses payable, and these expenses payable are in this question only wages because there is no lag shown for the overheads. So when we deduct this, then we arrive at the figure of net operating cycle. In certain cases, we have a concept of margin contingency. So whatever the operating cycle creates the working capital, we add certain amount of contingency so that there is no default in any cash liabilities, and that is why we add that figure. But that is not in the case of the question. So for the moment, we will be ignoring that, and in further sessions to come, if we will take up a case like that, and then we will solve it. So basically, we have to do these five calculations here. That is the calculation of the stock of raw material, of the work in progress, of the finished goods, then the receivables, the cash and bank balances will be given, the creditors, and the wages or the labor payable. And if you remember that when we talk of the word raw material conversion period, this was equal to what the cost of raw material consumed upon average stock of raw material. Now, basically, it denoted the raw material turnover ratio. And if we divide the year, which in this case is 52 weeks, if we divide the 52 weeks, that is a year, with this raw material turnover ratio, then basically we arrive at the figure of raw material conversion period. So if you remember the last session, we said directly that raw material conversion period will be equal to 52 weeks divided by this. Therefore, this cost of raw material consumed will go down, and we will multiply it by the average stock of raw material. The average stock of raw material. And this average stock of raw material is basically the current asset as mentioned above. As mentioned above. So, if we solve this, then the average stock of raw material shall be equal to the cost of raw material consumed multiplied by the RMCP and divided by 52 weeks. And this RMCP will be taken in weeks because we are dividing it by weeks. So therefore, this cost of raw material will be calculated from the data of the question. So that sees that ideally there is 1,04,000 units of the output, and each unit of output consumes raw material worth rupees 100. So basically 1,04,000 units at rupees 100 each is the cost of the raw material multiplied by the raw material conversion period, which in the question is 4 weeks, and that divided by 52 weeks. So it will be 1,04,000 into 100 into 4 divided by 52. So this comes out to be 8 lakhs. So this is the average stock of the raw material which is always there in inventory. So basically it denotes that normally raw material worth rupees 8 lakhs remain in the inventory and it constitutes the current asset. So this raw material stock is 8 lakhs rupees. So we will calculate all the three stocks on the similar lines and that will constitute the total inventory, and this total inventory plus receivables, that is debtors, plus cash and bank balance as given, and the total of these three figures will constitute the current asset or the gross working capital. So therefore we will have to now calculate the cost of work in progress stock. So similarly on the lines above, now if you calculate the work in progress conversion period, on the same lines, then you will find that this work in progress conversion period shall be equal to 52 weeks multiplied by the average stock of work in progress divided by the cost of production. But because the work in progress are specifically mentioned that they have consumed 100% of the material and only 50% for the labor and the overheads. So therefore the cost of each work in progress will be the 100% cost of the material plus 50% cost of the labor plus 50% cost of the overheads, that is half of 75 and not 80. So each work in progress will cost 155. Each work in progress will cost 155. So on the similar lines, we can calculate that the average stock of work in progress, average stock of work in progress shall be equal to the cost of production shall be equal to, just a moment, which shall be equal to the cost of production of the work in progress multiplied by the work in progress conversion period upon May 52. And this cost of production of work in progress shall be equal to 1,04,000 into 155. And this has been discussed how it has been calculated. The work in progress conversion period is only 2 weeks. So it shall be equal to 2 divided by 52. So therefore 1,04,000 multiplied by 155 shall be equal to this 2 divided by 52. So the figure will come out to be 6,20,000 rupees. So the work in progress that remains in the stock always is 66,20,000. So this stock comes out to be 6,22,000. ठीक है जी. Now we will calculate the finished goods stock. So on the above lines, the finished goods conversion period, this FGCP shall be equal to 52 weeks multiplied by the average stock of work in progress divided by the cost of production. But the difference here is that this is the cost of production of work in progress and this is the cost of production of finished goods. So on the above lines, the average stock of finished goods shall be equal to the cost of production of finished goods as multiplied by the FGCP and as divided by the 52 weeks. So as we have seen that the total quantity is 1,04,000 and each quantity has a finished goods cost of material 100, labor 30 and the overhead 70. I think labor cost was 40. We confirm it just. Yes, it was 40. So this total cost is coming out to be 210. So each goods cost, or I should say each finished goods unit being completely consuming material, labor, and overheads is worth 210 of cash cost, ignoring the 10 rupees overheads cost. This shall be multiplied by the finished goods conversion period, and this finished goods conversion period is 4 weeks. So this shall be multiplied by 4 weeks and divided by the 52 weeks. So therefore, this 1,04,000 multiplied by 210 multiplied by 4 divided by 52. So this 16,80,000 constitutes the average stock of the finished goods. So here this 16,80,000 denotes the finished goods stock and therefore this plus 620 of work in progress stock plus 8 lakhs of raw material stock creates a total inventory of 31 lakhs. So this business maintains a total inventory of 31 lakhs. Total inventory of 31 lakhs. Now, if we compare it, just a moment. Just a moment. Just a minute. So this 31 lakhs denotes the total inventory consisting of raw material, work in progress, and finished goods. Now, when we move to the debtors, that is the receivables, so we need the receivables conversion period, and as per the formula, this shall be equal to 52 weeks multiplied by average receivables, and this shall be equal to total credit sales. And that's what we were saying, that either we can take this credit sales at the selling price or we can take it at cost. We will show it both ways. So here the average receivables in line with the above calculations shall be equal to total credit sales multiplied by the RCP and divided by the 52 weeks. Now, if you see the above figure, the total units are 1,04,000, and we presume that because it is clearly mentioned that the production is even throughout the year, and on the same lines, the sales has to be even throughout the year. Therefore, and if you believe that there is uh, no data regarding the sales, what I'm saying that sometimes part of the sales is in cash and part of the sales is in credit. Here, nothing is mentioned. So we presume that all of the sales is on credit. So therefore, this credit sales should be equal to 1,04,000 multiplied by the selling price of 240. And then the debtors collection period is 8 weeks. So it shall be 8 weeks divided by 52 weeks. So what it will come out to be that 1,04,000 into 240 into 8 divided by 52. So this will constitute the total credit or total debtors. But this is at selling price. If we take this 240 and replace it by 210, that is the cost, then in this case the figure will come out to be 1,04,000 into 210 into 8 divided by 52, and the figure will come out to be 3360. So debtors are 3840 at selling price and 3360 at the cost price. So if we estimate our working capital on the selling price, if we estimate our debtors on the selling price, then we are overvaluing the working capital requirement by around 5 lakh rupees, and that is putting huge burden on our working capital finance. So therefore, debtors are always valued or should be valued at cost, and therefore the debtors in this case has to be 33 lakh 60,000, and the cash and bank balance has been mentioned to be 25,000 simply. So this figure of 25,000, therefore this plus 31 lakh plus 25,000, this denotes the gross working capital, that is 64 lakh 85,000, and it denotes the overall gross working capital. Now, on the similar lines, we will calculate the creditor's payment period, and therefore, on the similar lines, the average payables, that is the creditors, shall be equal to total credit purchases. But on the similar lines, we presume all purchases on the credit is creditor's payment period divided by 52 weeks, because that is in weeks. So here the purchases will be of the raw material, that is 1,04,000 into 100 जो raw material cost थी, and then you will see that the creditor's payment period is 4 weeks. Therefore, this multiplied by 4 divided by 52, So this is 1,04,000 into 100 labor cost payable, and that shall be equal to total labor cost multiplied by the labor payment period upon my 52 weeks. This labor cost has to be 1,04,000 into 40, and this labor payment period is 1.5 weeks. So therefore, this multiplied by 1.5 upon 52. So it will happen 1,04,000 into 40 into 1.5 and divided by 52. So this 1,20,000 will denote the labor cost. So taking the creditors as 8 lakhs, labor payment as 1,20,000. So this 920 denotes the total current liability, and if we deduct these current liabilities of 9,20,000, then we are arriving at the working capital requirement of 55,65,000. You can see that by using the net operating cycle concept, we can always calculate the stock of raw material, work in progress, finished goods, the debtors in the market, the cash and bank balance as given, and how much you have to pay to the creditors and how much is the expenses payable. And then we can always arrive at the figure of net working capital based on net operating cycle. So this 50,65,000 is the net working capital of the business. On this note, we close this session.